Hello, wealthy, successful, money making traders. This is your trader's friend. Thank you for joining me for another video, guys. I'm so glad you can be here with me. Today, I'd like to talk to you about 3 ways to place your stops. And I'm going to show you my favorite way first. So, if you've watched my Forex step strategy video, you know that I like to move, and we're going to start on the bearish side first. I like to move my stops, sorry, above the previous candle. So then you move that until you're stopped out, or if you're going in the bullish direction, your stop goes under the previous candle until you just continue on. And I like to have it under the big candles or above the big candles. So when I get candles like this, it's like, to me, this is just noise. But you just continue to move it along until you're stopped. Now, the next way is to move it with the swing, and in this case is going to be under the swing low. So if you get in on this candle, then your stop loss is going to go below the previous candle. Once you get up here into this kind of situation where you have this fake engulf that is not supported by the next candle, then you put your stop under this candle, because this is the candle that says, nope, the bears are not in control, the bulls are back in control. And you can see how this continues to go in your favor. Now, you may ask, how is it that I would know the difference between this setup and this setup? Well, actually, you have to wait for the close of the candles. But here, anytime I get a breaking close of the 10 SMA and it's coming back to reclose that, generally one or two things are going on. Either I'm going to have a reversal, or it's just a fake out. And in this situation, or I'm going into the chop. So it could be 3 things. But in this situation, you have an engulf that was not continued to be supported by the bears. The bears were not strong enough to continue to push price down in a bearish manner. So this is where you want to move your stop. And I should have had a little thing, a little line up here for this. But I'm so goofy, I already have a triangle. So your stop would go beneath this candle. And then when you came back down again, you have this same candle situation. And this is one of the things that you want to watch out for when you are in a trending market. When you are in a trending market, the way to trade with the trend is to wait for the pullback to the moving averages. And my moving averages, this is my 10, my 20, 50, and my 200. So you can see how price comes and bounces back off of the moving averages. And a lot of time it is at or near the moving average, because sometimes, like this one, you will fall below that moving average before price will then come and continue on in that trend direction. So these are the safest places to buy this market when it comes back to retest this area where your moving averages are. Moving average bounce. And the larger the moving average, the more significant the bounce. Now, here you have this hammer. Here you have a kind of hammer doji thing going on, but it's still at the moving average. So this is the safest place to buy. Now, what your stop being under here, if price then comes back below that, you're out. Now, people say to me sometimes, your stops are way too tight. Yes, I get stopped out sometimes, but guess what? I always have the power to get back in. I'd rather have a small loss here if the market goes against me than to take a chance on a much bigger loss. Let's continue on. So this is that swinging stop loss in the opposite direction. And I made note of these candles. These are the candles that I look for in the market because I know if I get this candle, one or two things are true. And it's simply because of the size of that candle. Either that's an exhaust and the end of that trend, or I am getting ready to go into a choppy period. And the periods now have gotten so ridiculously long. I am so not loving this because this is the 5 minute time frame. But here you are making a series of lower highs, and you can see how this candle came up with no shadow on top. Tiny shadow at the bottom, but it came to close this candle out, but it could not sustain that momentum and it fell right down. So in a situation like this where you know that you have made a lower high, when you get the opportunity again to get a really good setup, especially if it's close to the moving average, sell again. Now you can see here where you don't have a lot going on. You can do one or two things. Hang out in this area until you break below it, or you can sell every single reversal pattern. And sometimes it's not going to work. Like in these two instances, it didn't do a whole lot for you. But here you got this, and it just continued to bleed down. When people say your stops are too tight, just note if your stop, well, actually, if your stop loss was here, you'd eventually get stopped out. But if you're continuing to move that, if your stop loss is here, you're not going to get stopped out until you get to just right above there, which is going to just kind of stop out everything. But so technically you have one stop, but just say you did this and got stopped out, which you would not have. And you came here and got stopped out. You got stopped out twice. You guys have seen me get stopped out like 4 times in one market. No big deal, because when you get it right, look at what is going to happen for you. So you lost 2 candles up here. So what? Look at what you gained right here. Tight stops for me is where it's at. And you have videos. I saw videos today saying that you shouldn't use a stop. It is absolutely ridiculous because if you don't use a stop, I promise you, unless you are super disciplined, you're going to eventually blow up your account. Let's take a look at another example here. Now this, you can trade this one or two ways. And I always start out with that favorite moving stop loss. If my hard stop is here, then I just continue to move my line until I am eventually stopped out. Now, a lot of times, if once you get the close above that big candle, you're either going to chop or reverse. One or two things are going to happen. And here you can see this big rejection. You can see the distance between these moving averages, between the 50, the 20, and the 10. You have this big rejection here, and then price continues to let you know, hey, the bears are in control. So there are a few things here that are letting you know that the bears are in control of this market. One, it's been trending bearish. Two, the bulls try to take the football, run the other way, but the bears stopped them. More than 50% of that candle into the candle's real body. And not only that, they came to totally dominate that candle, making their gain pretty much nothing. And you are still under that 50 period SMA. You barely got above this 10 and 20 SMA, but then price showed you, nope, we don't want you up here, and it further confirmed that in the next candle. The bulls tried again, but they were not able to break above that bearish candle, and you can see what happened. Now, the last way, and before I go into the last way of placing your stop, Whenever I get in the market, I look to the left to see something that was going on. Now, this candle, because of the size of it compared to the previous candle, this is a very suspicious candle. It would not have been if price continued to support the strength of that price action by continuing in a bullish manner, and we know that it did not. And eventually, price just collapsed. So I just wanted to point that out for you. These are candles that I'm always suspicious about. Even here, when you have a giant candle like that, then these are candles that I watch out for. But the last way to place a stop loss in your market is right above the previous candle. So if you got in on this candle, you can just place it right here and not move it. Just place your hard stop here and do not move it, and just let the market go until you were ready to get out. That works too. So those are the three ways to place your stop. Again, you can place your stop above or below the previous candle. You can move your stop loss above or below the previous candle, or you can move it below the swing high or above the swing low. And don't forget, you want to take the trades where you have a reversal candle at or near that moving average. And I want to say this about your trade. If you are confident enough to take a trade, you should be confident enough in that trade to insure it with a stop loss. The market is different every day. Every single trade setup is different. And I will tell you what it is that I know about the market after 10 years of trading and what I realize about the market. One, I don't know squat. And two, my trading plan is everything. Follow your trading plan because it's there to protect you. I want to remind you that you can absolutely do this. You can be successful at Forex. Have an amazing pip filled trading life.